Right, g'day Year 9, welcome to week 10, our final stretch of the term here. This week what we're going to be looking at is today in our first lesson, Medicare and this idea called PAYG, and if you've got a job at the moment you might see that on your payslip. And then in the last two lessons we'll be looking at how we calculate tax, a person's income tax. So let's jump straight into it. So I'm going to kick off with Medicare. What is Medicare? Well, Medicare is Australia's universal health insurance scheme. It's the thing that allows you to go to the doctor and pay no cost, pay nothing, or maybe only have to pay a little bit to go see your doctor. It's the thing that allows you that if you break your arm and you go to the emergency department at the hospital, you don't have to pay for any of the services that you use within the emergency department. Right, it's a really good system that we've got set up here in Australia. But we all know breaking bones and going to see doctor costs money. So how is it funded? And well, it is funded by people's income tax. So any Australian who earns an income and are eligible to pay tax, we also have to pay on top of that is what's called a Medicare levy. So every single Australian who earns an income and pays tax pays a little bit of their income tax towards Medicare. So me as a teacher and having a job, I pay a Medicare levy, and I've paid a Medicare levy every single year that I've had a job. Now what that means, I might not have gone to see a doctor at all this year, but I've still paid money towards Medicare, and that may have helped someone else who needed to go see a doctor, who needed to go to hospital, have emergency surgery, etc. And down the track, if I ever need to be in that situation, well, Medicare is there to help cover me. Australians, through this system, we all look after each other. So and that is done by when you get a person's taxable income, 2% of your taxable income is dedicated towards funding Medicare. And we'll look at some examples of that in a second. PAYG tax. It's also referred, that's what its short name is. What it actually stands for is pay as you go tax. Now, what is that and why do we have pay as you go? Well, PAYG is when you've got a job, your employer pays you your weekly, fortnightly, monthly pay, and instead of giving you all of the pay that you've got, they look up tables and they look up spreadsheets and information from the ATO, which stands for the Australian Tax Office. And what they do is they go, okay, this small amount of money we're going to give to the Australian Tax Office on your behalf. We're going to start paying your income tax this year, and what we're going to do is we're going to pay it little bit by little bit. It's kind of like lay-buying your tax. Every time you get paid, a little bit of your pay goes off and pays your tax in advance, and then the rest of the pay goes to you. So the question then begs to differ, why use PAYG? Well, I want you to think about this. If someone has an income of $45,000, the income tax that they owe is $5,092. And then another example there is the income, if you earn $120,000, the income tax that you owe is $29,467. Now, I don't know about you, but I know personally myself, if I was earning $45,000 a year, what that means if I didn't use PAYG, I would need to keep in a separate bank account ready for July 1st, because July 1st is the end of our financial year. I would need to keep $5,000 set aside so that at July 1st, when tax time rolls around and the government goes, hey, Pat House, where's your tax? I would then be able to give them that $5,000. So many people might not be that efficient with their savings, and you think then if you're earning more money, you've got to put more money aside, $120,000. You need to put $30,000 aside and wait and save up that $30,000 throughout the year at July 1st, and then all of a sudden you can give all of that $30,000 to the government. And at July 1st, you would need to give all that money to the tax office. But are many people that diligent enough to save that money? And well, the answer sometimes is no. So we have this system, PAYG, and like I said before, it's where you lay by your tax in advance. So you give a little bit of tax off every single time you get paid. So come July 1st, you don't all of a sudden have to find maybe $30,000 to give to the Australian Tax Office at that time. You've already paid little bits of that all throughout the year. So how is PAYG calculated? Well, like I said earlier, the ATO have a large list of tables and that employers can look up and see how much money that they should be sending aside to the Australian Tax Office on your behalf. Now, I've included here on the worksheet some links to those documents for you. So there's a link for weekly, a link for fortnightly, or there's a link for monthly as well, depending on how you get paid. And what I have here is I have an example of the weekly tax table, and I'll just zoom in there a little bit for us. And you'll notice that the first column that we've got here, it talks about your weekly earnings. So how much do you earn each week? And you can see it goes 176, 177, and so on. And then the next column is the 200s, the 300s, the 400s, the 500s, and it goes on for a number of pages. Now, the other thing I want to quickly point out here is this grey out section. This section here says you pay no tax. This section here says you pay some tax. And in Australia, we have this thing called the tax-free threshold, which means for the first $18,000 you earn on your income, you don't get taxed on $18,000. Now, if you work more than one job, only one job's allowed to go, oh, we're not going to tax you on the first $18,000, and that's what this grey column stands for. Right? It's only one job. Your second job that you might have where you go, I can't claim the threshold, you can see straight away you start paying tax almost immediately. Alright, so let's jumping into some examples here, year 9. So Ian's taxable income is $109,500. What is the value of his Medicare levy? Well, Medicare levy, one is 2% of our taxable income. So 2% of our taxable income. Now in the question here, it says Ian's taxable income was $109,500. So all we need to do to find Medicare is what is 2% of $109,000. So his Medicare levy is going to be $109,500 times 2%. And remembering fractions are our friends. And when you grab your calculators out and evaluate that, you'll see that Ian contributes $2,190 towards Medicare for that financial year. Okay, in example 2 here, Alison's income last financial year was $67,200. If she has allowable deductions of $5,450, calculate her taxable income, and then once you've done that, let's calculate the Medicare levy. So remember, taxable income is your gross income minus any allowable deductions. So here, our taxable income is going to be $67,200 minus Alison's allowable deductions of $5,450, and evaluating that, we can see that Alison's taxable income is $61,570 for that financial year. The Medicare levy, well, remembering that the Medicare levy is 2% of our taxable income. So we need to find 2% of $61,750. So $61,750 times 2%. Type that onto our calculator to evaluate that. And funny enough, this answer is $1,234. A 1, 2, 3, 4 situation of that. That's kind of cool. Alright, with example 3 here, Jacob has $313 in PAYG tax deducted each week from his pay. If this happens every week, how much tax does Jacob pay in 1 year. So we can calculate his total tax here. We know that 313 times 52, because he has 313 taken away for 52 periods, we can see that Jacob's tax for that year is $16,726. All right, question 4 here. Using the fortnightly tax table, calculate the amount of PAYG that needs to be deducted if an individual earns $998 and claims the tax-free threshold. Right, so what we'll need to do is we'll need to go up and open one of those documents. I've taken a screenshot of it here for you, but in the worksheet you'll need to be able to have access to those. So we look up the worksheet here and we can see $998. So if we grab my highlighter out, $998. These are the values that we are looking at here. And the other important part here is they claim the tax-free threshold. So we're looking for the number in that grey column. So we're looking here at $70. So this person has $70 worth of PAYG withheld from their pay for that week. So the PAYG deducted is $70 for that week. Alright, Year 9, your work for this week now is to complete the questions that's below here in the worksheet, and if you have time, complete the 10 quick questions. And as always, make sure you correct your work from the solution, show that you've ticked it, fix any errors in your working out. Really important that you show each step of that working out. Take a photo, upload it to Canvas, and get that done by Friday, 17th of September. Alright, Year 9, have a great lesson.